Hello friends, this is our Black Friday deal running through the weekend. 20% off individual courses utilizing the code listed here, as well as an additional 10% off the already 20% off bundle of both courses together. A lot of people are still waiting to get into the chat room and live stream community, and those that finish the courses get automatically added to an express list. But once you are on that list, you still need to go to the website membership page and sign up in one of the 2 spots that open up each day. Now, last week we had a day where both spots did not get filled. So you need to go to that website and stay persistent, stay patient, as we are doing this to ensure that we do not flood our chat room with new people, new questions. We're trying to keep it as productive and as efficient as possible. So keeping it to 2 people a day does that. We appreciate all the support. Let's get to the charts. Hey everyone, checking in on the markets. Oil is going to play a significant impact in analysis of the markets over the next couple of weeks, in my opinion. So make sure and check out the commodities video that I did this weekend. And then on weekdays, I'm just going to include oil in these market videos because I think it's going to have a significant impact as I describe in the commodities video. So SPY right now is still extremely weak. We've seen 2 days in a row a sell-off into the end of the day on the low volume trading days of both Wednesday and half day Friday. And the sell-off closed us at the low of the day, both days in a row. So we have confirmed this bear flag by breaking 263.15 support. We haven't broken it significantly, but it was a very weak bounce attempt. We've dropped to lower lows, and we're looking back at the October lows of 259.85. On the daily time frame now, any bounce under 267.15 doesn't mean anything. The bears are in complete control as long as 267.15 remains a resistance level. Weekly time frame for SPY, still trying to form that higher low, but we closed right at the low of the week, and that does absolutely appear to be in sight as we approach this coming week. And again, oil bouncing could be a factor that contributes to the bulls potentially holding that support level if an oil bounce does get going. IWM still holding support, double top on Wednesday and Friday, 149.37, 149.30. So the range we're watching is 145.59 support and 149.37 resistance. And the weekly time frame, same as SPY, trying to form that higher low right down at that level. A little bit of a lower wick this week where SPY doesn't have one, but pretty much the same setup overall. QQQ also still weak. Key resistance 161.97. Key support is 157.13. Weekly time frame has already dropped to a lower low, definitely favoring the bears because any bounce on the weekly under 175.58 will now just be another lower high, and it's going to take a while for the weekly time frame to shift back in favor of the bulls for QQQ. XLF broke a key support of 26.03, and now we have a lack of support nearby. XLF accounted for the majority of the weakness of the market on Friday, in my opinion. And aside from 25.93, next level is 25.44. So there's a lot of space to the downside. Still very clearly have that higher low. And that's why SPY is still holding support while QQQ has already dropped to the lower low. But now that we have broken that short-term support on XLF, the bears have that short-term momentum. And we're going to be heading down towards that October low as well. VIX on the daily time frame keeping the bulls in control. Range right now is 2011 support and 2265, 2381. That's 2 resistances. We are going to be looking for the weekly time frame to continue to tighten on VIX, and we'll be watching to see how long we can keep this little daily higher low pattern intact with 2011, the most recent daily higher low that was established. So overall, tech sector is still weak. Financial sector seeing further weakness. SPY seeing further weakness. The bears have complete control at this point. Oil potentially marking the bottom. I'm just recalling back in February of 2015 when the market dumped. Oil was very weak, and then it was a tweet about oil that gave SPY a double bottom, and then the weekly time frame saw significant recovery. So I'm watching for the potential if the oil oversold bounce has any impact on the markets attempting to bounce as well. And that's something we're keeping an eye out for over the next 2 weeks, as oil is very overdue for at least a short-term oversold bounce on the daily and weekly time frame. So we'll be keeping an eye on that for the next couple of weeks. Hope you have a good weekend. We'll see you soon.